I just looking at the this little Bing news that comes up, and it said 4 ways to protect your portfolio in a bull market, and I think they're talking about the stock market. So already we're hearing this this bullish, everybody, wow, it's a bull market. Okay, when you hear that, and I think there's a time to look in the other way because something else is coming. I remember the 2000, in the year 2000, on the TV came right on the after they dropped the ball, and it became the year 2000. Of course, all the computers were supposed to crash. I remember that Merrill Lynch had a big ad that came up on the screen, and it said, "We're Merrill Lynch, and we're bullish on America," or "We're bullish." And I thought, wow, there's a sell signal. As soon as they start telling you on the front page that how do you protect your portfolio in a bull market? Wow, why would you have to protect it? It's bullish. So that's the perversity of the market, is that when everybody agrees, there's usually too many people on that. It's a crowded trade, and the ship's about to tip over. Everybody's leaning over one side. Everybody agrees. Oh, that's great, because everybody's agreeable, right? It's a nice thing to do. You're a nice person then. But traders that make money are always thinking of the worst case scenario, I think, and try to take advantage of the worst case scenario. So this is the euro against the pound, and here's a daily chart, and I can go to the monthly here and see that if you go back to 2004, there is a top here, and there's a top down here, and there's a little baby top here. And if I zoom out one more level, I'll go out 20 years of this currency pair. And so here's where we're at right now. And we've been going down for, well, it looks like on here, almost 2 years sell off. And of course, you can do all the trend line analysis there to see, okay, you broke that trend line. Of course, you kind of wanted to be short. I think maybe on the breakdown of this support level. Of course, this is the big contention pivot here. Was this triangle at the top, bottom, this support, and then you crash through. Of course, there's a keys off of this. This window of price here is a big deal, right around 79 cents or 79 euros, whatever that is. Okay, so let me zoom back to the weekly. There's the weekly. There's what it looks like there, the big redistribution phase, and Jim Wyckoff theory, he would say that would be a redistribution. In other words, distribute, then redistribute, then one more leg down. So I think this moves over, and I think it's time to think about getting on a long side. Now, the passive way to get in on the long side of this would be to, of course, we're still in the daily here, so this is pretty, you'd have to run pretty wide stops, and these black bars represent a 100 pip range. So say you put a buy stop here above this last known swing high. So you got a buy stop here, and when that gets filled, well, you've already got a sell stop here connected to that, hopefully a contingency order. So if you're wrong, it's going to take that out, or you can put your stop here. So you could have, or you could put your stop here. Or you could buy this price right here. And this is the problem with trading. Now, you could either buy on a limit here as you dip down and get that better price, or you could have a whole series of buys here. Now, this goes against conventional, at least what I see. Most people would just take one position, but I would take multiples. I would buy, if I really thought this thing was going up, I'd be buying just by default, I just have buy limits placed all the way here, all the way down, and maybe there's a stop down here, my last entry to buy. So here, if I just buy the yellow, here's my buy limit, and here's my buy limit, and here's another buy limit. And each one could have its own stop, or I could just say, you know what, I'm so right about this trade, I'll just put a big master stop down here, walk away. Now this could be all just 1Ks, right? Then I could just move on to the next currency. You don't have to trade just one currency. Here's an example of a double bottom becoming a double top on the daily, on the euro against the pound. And you have plenty of time to get in. You could sell up into that, or you could sell with a stop here, with a stop above, and you get picked up in the stream. And here you're second guessing yourself, maybe because after they filled you, it came back and you're underwater on the trade because you got in here on the stop, and you're like, oh my god, and you get scared, you get out, and then the thing just like, oh, see, I knew I was right. I mean, this is the problem is the market's just not going to move in a straight line. So if you know it's not going to move in a straight line, you can position yourself for the fact that it probably isn't going to move in a straight line, and you can make money on the entry of the, say you're a seller here, right? The chance to sell here would have been this double bottom gate taken out. This came up it probably did come up into that. Now you'd have to go to the 4 hour to see if that's true. Of course, the 4 hour, you got plenty of time to get in. Yeah, so you would have got filled on this had you had to stop here. Of course, you got filled here, but look how it came all the way back to there. And the reason why I wouldn't go short here is because we have this top bottom, and I think I'd probably have a buy limit here. And these buy limits would still be good, right? But this is a logical place to get in. And then here's a triple bottom on the 4 hours. So the 4 hours definitely got more, less risk, more signals. Here's a perfect bottom, became a top. You got about, if this is a 4 hour down, you got 8 hours to get into this trade. You know, presupposing you've got, at least in the rearview mirror, the daily chart, because you don't really need it. The thing about trading previous tops become bottoms, or like this is range trading nightmare for this is 1 week of just up and down, up and down. Now the range traders are cleaning up on this because they're buying support and selling resistance. They keep buying here, and they keep selling here. And if you're that guy, if you're a range trader, you just cleaned up. I mean, you just made so many pips. I think you're making about you're making like 30 pips up and down, up and down, up and down. So that adds up. This is like 120 pip profit. And you keep running your stops above this. You never get stopped out. And you've got your other stops here on the long side. You never get stopped out. You're just trading just beyond that barrier, right? Then comes this, your last attempt to buy here, looking for that another easy trade, and then they stop you out. But you made enough along the way here that when you got stopped out of this, when you bought this last, of course that was 3 and then 4, so maybe you were pushing it. The major trend was still on a higher time frame. The major trend's still drifting down, so it wouldn't be unnatural to see it break down and crush through there. Now it's almost back to where your stop is. And if you're the kind of person that could step in front of the market and buy the retest of this bottom, if you had a stop too tight there, you got stopped out. But if, say, your stop was pretty generous, 30 pips, you were able to ride it not only back to previous support, but it blew through it. When this happens, we're in a accumulation phase of some sort. Now let's go to the 1 hour. Now we're going to get down to a little bit less risky trading, but a little more work. More work, less risk, typically. There's a bottom. There's a bottom. There's the top that was supposed to become a bottom. So this would just keep melting down through this channel here. Right, the expectation here would be this bottom became a top. I've got blue, which means I'm in a downtrend. It's going to keep going down, right? Then, just to add insult to injury, you know, if you had to stop at this double bottom, but now here's a classic situation on the 1 hour, and this to me is probably the lowest risk kind of trading, is you got this double bottom here in time, then the market makers come down in one last stop out. Like, you're buying this, and you put your stop. I don't know if anybody's ever done this. I think I did because I was told to run stops at the last known. A lot of stuff people tell you is completely gonna. Of course, if you can psychologically handle being stopped out a couple times. So say you went long, you had a stop here, they stopped you out, so you moved your stop to here, right? You moved your stop to there, and they stopped you out again. And then here it goes ripping north and leaves you in the dust. And you're like, wow, maybe that's not a good rule. I don't know. Of course, you made it all back. I mean, these are little losses. So really, a tight stop, you have to be psychologically prepared to keep on having to re-enter the trade and get stopped out and re-enter the trade. And, you know, it's worth it in the long run, right? Of course, even if you do get into this trade, well, where the hell do you get out? Like, you got to have an exit, let's say this bottom to this bottom. This is your exit probably. The conservative exit is to get out on the retest of this top. So you take something off the table and let the rest ride. Is what you typically do, because if you got out of 70% of your trade here, so it's almost like a scalp, and then you got 30% just drifting, and then you could run your trailing stop, and maybe you peel off a little bit on this climax move here, and then here you take everything off, say, right? And this you watch it go up and say, maybe I should have left one little itty bitty thing on there. And then you get this amazing move up here. Of course, this is the market maker stop hunt for the bears. They're going to go grab the stop that the guy who's short has up here. Realizing that this is a 100 pip. This is a 100 pip, well, this 80 pip move off of this bottom here. Okay, now let's go to the, this is the 1 hour. So let's say market opens tonight and you got a buy stop here and you got a buy limit here, right? Which would be a nice place for them to take out that stop, but it comes back into the support. Of course, you've got a bunch of little tops in here. Got that top. This is why not only would I scale out, I'd scale in. I just think it's the only way to trade it. Well, for me, right? I mean, if you're looking at the 4 hour, geez, this looks like it's about to, we could at least draw a channel here, a first trend line. We've got a, just as the market closed on Friday, we got this, of course, anything could happen, right? It could break down. But that'd be the first leg up, and you're kind of like projecting, if you're going to do your price projection, you're going to hang that off the highest close in there. So my first target would be up here to go stop hunt the tops.